Thank you, Pierre.
Okay.
I'm extremely passionate about our insurance product. We have a terrific team here at Tesla of folks who have been spending a lot of time developing this. They're probably listening to the call, so we're pretty excited so far, Pierre. So,
Sure.
I mean, at the highest level here, we entered the insurance market kind of unintentionally, I would say.
Hello everyone, my name is Kaseem. Welcome to the channel. Welcome to the $1 Million Challenge. This is the channel where I challenge myself to get to $1 million. I show you my process in order for me to get there. So if you like this type of content, consider sticking around, subscribing to the channel. I appreciate you for that. So in today's video, we are going to talk about Tesla's Q3 2021 earnings call. This is a continuation of the previous videos that I've done. I'm going to leave those right here so you can go check them out. It's a continuation because I like to talk about Tesla's earnings call. When Tesla have their earnings call, this is the reason why they have earnings calls, so investors can hear what the company management have to say, and if they agree with them, they can keep on investing, and if they don't, they can sell the stock. So it just gives you a nice insight as to what the company is up to. So that way it gives you a little bit more clarity on the company and what they're doing. And a company like Tesla, where they're just growing so fast, they're breaking the mold, they're leading with technology, they're creating mad technologies, like they're just doing crazy things. You don't want to get all your information from the news media about the company. You want to get your information about the company from the company. Okay, so that is why I do my part to break down these earnings calls, and I hope you find it enjoyable, because I know it can be a little bit boring, but making money, it's boring. There's nothing too exciting about it. You do boring stuff like this, like listening to earnings call. Okay, so that's what it is. Anyways, let's get right into today's video. Again, I hope you find this information helpful. If you do, please drop a like for me. I appreciate it. It will greatly help me out. So we're gonna get into the earnings call here. This is the segment of the analysts. Okay, the analysts are asking questions here, and the first question is gonna be from Pierre Ferragu. I've done a video about Pierre Ferragu before. He's a pretty good analyst. He knows what he's talking about when it comes to Tesla. I'm gonna leave the video of Pierre Ferragu that I did in the past. I'll link it so you can check it out. But yeah, let's get right into the video.
Pierre, feel free to unmute your mic and go ahead. The team is working on that. Let's just go back to say.com questions.
So this is retail questions.
So the next say.com question is, can Tesla allow for FSD to be transferred to another vehicle at a fee, something less than 10K? Early adopters are paying the price if they want to upgrade their vehicle. You lose the value on the trade-in, and now you have to buy in at the higher cost.
I don't think that this is widely known, but we're already actually doing the sentiment of what this question is asking. Okay. If you trade in your Tesla to Tesla, there's a difference in price that we pay for a trade-in that has FSD compared to one that doesn't.
Okay.
And so there's that premium that we pay to repurchase the FSD. That money can then be applied towards the purchase of a new car.
Okay.
So I just, we hear this feedback quite a bit. We see it on social media, we see it in the forums, etc. And so this already does exist, not directly in the form here, and we don't call it out explicitly in the trade-in, potentially that we have increased the price of your trade-in as a result. And hopefully this clears this up, because we do actually do that.
Okay.
Okay. And the next question is, Elon said that we get an update on Cybertruck in November a year ago, but it hasn't happened, and we know there are a lot of updates. Will you show off the new and improved Cybertruck?
Yeah, thanks, Martin. You get a lot of questions on Cybertruck. We've been busy detailing the Cybertruck to achieve the prototype version we shared with customers a while back.
Sure.
As you may have seen,
The Cybertruck is gonna be a massive car. Definitely gonna get one. That car is mad. I love it. I love the look of it. I love the quad. I love just the way everything looks. I love it.
recently on social media, we've built a number of alphas and are currently testing those to further mature the design. And while those point out a few key additions like rear steer, there are also a number of smaller or less visible improvements, though the product is largely true to the initial vision. We'll continue to work through the product in the beta stages that we're in now, and look to launch that late next year.
Sure.
Okay, thank you very much. We just promoted Pierre to a presenter. Can you hear us?
Can you hear me, guys?
Yes, we can hear you.
Amazing.
Okay, cool.
I'm very impressed that you managed to figure that out.
We are too.
Thank you, Pierre.
I would have panicked if. Anyway, let me ask you my question. I'm very intrigued by what you guys are doing on the insurance front.
Insurance.
And so you have now in the market.
Yeah, like Tesla also have an insurance company that basically like Geico as well. Like they insure the cars. I almost forgot that.
In Texas, an insurance product for which the premium varies as a function of the safety score of the driver. And so I'd love to hear you about that. You know, you must have some initial data points about market reaction, you know, what's the uptake? And from there, can you tell us about how you think you're going to distribute that? Is that going to go through your install base very easily, or is it going to be like a heavy marketing push? And then maybe tell us about your expansion plans. You know, what are the next geographies? What's the timing? How fast is that business line likely to grow in the next few years?
Yeah, thank you, Pierre. I'm extremely passionate about our insurance product. We have a terrific team here at Tesla of folks who have been spending a lot of time developing this. They're probably listening to the call, so we're pretty excited so far, Pierre. So, sure. I mean, at the highest level here, you know, we entered the insurance market kind of unintentionally, I would say. You know, our customers were coming to us complaining that the price of traditional insurance was too high, and it was reducing the affordability.
Again, most of the old traditional ways of doing things, how do an insurance company, how do they figure, okay, this is a new car, this is a car that is obviously the best car, is the safest car? Well, we don't know what's gonna happen because we don't have experience with this car. Well, the best thing for us to do is to charge a little bit more. Whatever that person's insurance would be on the Mercedes, we'll charge them a little bit more. And for the people that are buying a car, you know, that the insurance outside of Tesla will be expensive. So it makes sense for Tesla to get into the insurance business, you know, no brainer.
Of a Tesla. And part of our journey here at Tesla is we want as many people as possible to be able to afford our products.
Definitely.
That's extremely important to achieving the mission of the company. And if you look at the price of insurance as a percentage of what somebody's monthly payment is, it's quite high.
Yep.
And we spend extreme amounts of effort in manufacturing to take $5 of BOM cost out here or $10 out somewhere else. If we can get, you know, $5, $10, $20, $30 out on a monthly payment, you can calculate what that means in terms of reduction of the price of the car if you finance it. And the leverage of improving insurance cost is huge in terms of affordability. And so that's kind of the context by which we stepped into this. As we started to do more research, you know, essentially the tools by which the insurance is traditionally calculated are optimized based upon the existing data, but the existing data is limited.
Sure.
So there's a focus on things like marital status or age or other attributes like that.
And Tesla has a treasure trove of data, because everything you do in a car produces data, you know, so they can use that information to be able to price your insurance for the car.
You know, accident history is a good one, etc. But what essentially happens here is customers who are low risk and don't actually file many claims end up overpaying on their insurance relative to their cost.
Sure.
That overpayment then goes to riskier customers who are essentially being subsidized.
Is that fair?
And
that is not fair. People that have good insurance record, that don't get into accident, they get charged more by insurance company to pay for people that have bad records, that have bad insurance record. That is not fair. So they're coming in and they're coming in to improve the market, the Tesla insurance. Great for Tesla and its shareholders like you and I.
As we looked at this and we looked at the data, we thought this just doesn't seem like it's fair. At Tesla, because our cars are connected, because they are essentially computers on wheels, there's enormous amounts of data that we have available to us to be able to assess the attributes of a driver who's operating that car and whether those attributes correlate with safety. Because we do get a signal when a car has been in an accident. So we've been spending our time looking at hundreds of different variables and also looking at billions of miles of driving history. And we've been able to fit a model that is able to predict with decent accuracy the probability of collision over a period of time.
Cool.
And the model is not perfect, right? The model is a function of the data that we have available.
Sure.
The data set continues to grow.
Sure.
We continue to experiment with new variables, but we do have a model that works pretty well so far. And from that model, being able to predict frequency of collision, we can then align that against a price curve. And we can have individualized pricing integrated into the car, integrated into the app, integrated into that customer's experience. That incident history is a good one, etc. But what essentially happens here is customers who are low risk and don't actually file many claims end up overpaying on their insurance relative to their cost. That overpayment then goes to riskier customers who are essentially being subsidized.
Exactly. Not
fair.
fair.
As we looked at this and we looked at the data, we thought this just doesn't seem like it's fair. At Tesla, because our cars are connected, because they are essentially computers on wheels, there's enormous amounts of data that we have available to us to be able to assess the attributes of a driver who's operating that car and whether those attributes correlate with safety. Because we do get a signal when a car has been in an accident. So we've been spending our time looking at hundreds of different variables, and also looking at billions of miles of driving history, and we've been able to fit a model that is able to predict with decent accuracy the probability of collision over a period of time.
Cool.
And the model is not perfect, right? The model is a function of the data that we have available. That data set continues to grow.
Yep.
We continue to experiment with new variables, but we do have a model that works pretty well so far.
Cool.
And from that model, being able to predict frequency of collision, we can then align that against a price curve.
Sure.
And we can have individualized pricing integrated into the car, integrated into the app, integrated into that customer's experience.
Oh my God. You see why I keep saying I love this company, man? Smart people. It's only smart people that work for this company. Like there's no way you can be dumb for you to work for this company. Think about all the stuff that you just talked about for like the past 5 minutes. Okay? Think about it. We have all this data that's coming in. We know everything that happens in the car. We have all this data. We can take all the data that the insurance company use already, plus our own data. Then we can put it into a model, mathematical model that can give us pricing for this individual. What is the likelihood that this individual is going to get into an accident? Give us an accurate pricing. Then we can take that information and feed it into the app, into where we can put it in such a way that we can give the driver active feedback. Hey, you know, when you drove today around 10 to 11 p.m., you took a trip to this place, you braked too hard, you drove too fast, you took this turn too fast. If you do this will reduce your insurance price for next month. Well, that's something active. It's feeding the driver good information that can help improve the driver's driving, you know, and it makes everybody safe. It makes the driver safe. His insurance will be cheaper. It makes other motorists safe. You know, this is the thing that this is the kind of technology that Tesla will bring to the table. They take all the information that is available, put in their own information, feed it into a customer experience that would improve both for Tesla. It will improve their car. It will improve the safety rating of their car, the perception of people using their car. It will improve those things. At the same time, the data that Tesla is getting, they're using that data to basically train drivers, teach drivers how to be a better driver. Amazing. Tell me which other company can do stuff like that. None.
With a feedback loop back to the customer on how they are driving after every drive, the attributes that they were successful on or unsuccessful on.
After every drive, the attribute they're successful on and unsuccessful on. Amazing. This is the kind of thing that you get with this company. You know, they look at how things are done right now, and they just bring a completely different picture to it, and they just make it better. Can you imagine if your insurance company is able to give you feedback? Hey, you could have done this better. You could have done this better. You could have done this better. Not just to track you for the sake of tracking you, to see, hey, you said you're supposed to drive 500 miles, but you're driving 1,000 miles. Then we're gonna charge you more, because that's how those people, they do it right now. They send you that little dongle. You put it into the car. They're able to track you. If you drive more than what you told them you normally would drive, then they're gonna charge you more, which is not what Tesla is doing.
And the tips of things that they can do to improve their safety.
Exactly.
So that's what we've developed.
Mm-hmm.
We then included the safety score as a part of the FSD beta enrollment program.
Nice.
Where we have almost 150,000 cars currently using the safety score, and I believe the latest data is over 100 million miles of driving.
Nice.
So we've been able to go back and analyze that data, and we've learned two things coming from that.
Nice.
The first is that the probability of collision for a customer using a safety score versus not is 30% lower.
Nice.
It's a pretty big difference.
Yep.
It means that the product is working and customers are responding to it.
Nice.
The second thing that we've looked at is what is the probability of collision based upon actual data as a function of a driver's safety score. And that is aligning with our models. Most notably, if you're in the top tier of safety compared to lower tiers, there's multiple X difference in probability of collision based upon actual data. So, this is a very new and very exciting frontier for us. I know that was long-winded, but we spent a lot.
It's okay, Zach. Give us the details. Let's know what's up. Because this is great. It's great to be able to know that this is what they're doing, taking all this information, bringing it back to this is how this can help our customers, because what's the whole point of a business? To help their customers make their life better, so their customers will stick around and keep on buying their products. I.e. iPhone, Samsung. You buy the next iPhone, you buy the next Samsung because you know that the product will make your life better one way or the other.
A lot of time on this, and we put a lot of thought into it. Specifically with respect to the rollout, the insurance industry in the U.S. is intensely regulated, and it's regulated on a state-by-state level. That means that we require regulatory approvals from each individual department of insurance at each individual state. Texas is the first state that we launched in. I do want to thank the Texas insurance regulators here. You've been great to work with. We have a roadmap of additional states. We will launch the product in those states as we receive regulatory approvals. And our goal is to be in every major market in which we have cars in.
Sure.
we did a soft launch in Texas. Was it last week? Yeah. And what we're seeing in initial take rate data is that if you compare that to what we're seeing in California, we're off to a good start here. So we're very excited about it. We're excited about individual risk-based pricing. Mm-hmm. We're excited about the ability for folks to become safer and as a result save money. Mm-hmm. And it feeds into our priority of a company of building the safest products in the world.
Sure.
Yeah, if I can add to that, it's really exciting for the engineering team to see the finance team and taking on safety into their world too. It's just pervasive. So thanks for that, guys.
Thank you, Lars.
Thank you. Peter, do you have a follow-up question?
No, I think I'm fine, Zach. Thanks for taking the time to answer. It's fascinating and very interesting. Yes, I look forward to looking into that.
Thank you.
Okay, so I'm going to end this section there. This is great information that we've gotten right now. So I'm going to end this information here, this section here. Okay, so this section is basically geared towards insurance. Okay, that's the main thing that it covered in this section. And as you guys hear from Zach and the team, they basically are doing an amazing job getting the information that is already out there, getting the information from the data, and taking the insurance, them pricing the insurance, taking that to the individual level, whereby your insurance company, which would be Tesla, would be giving you feedback on how you're driving. So basically, they'll be low-key training drivers to make them better drivers so they can pay cheaper insurance. Isn't that amazing? Do you get that from your current car company? Do you get that from, the current insurance company that you use? Even if you get that little dongle that they give you that you plug into your car, they're basically using it to try to track how they can charge you more, not how they can give you a nice feedback loop that will improve your driving. So I hope you understand what Zach just said. If you don't, you can go back to it, rewind it, watch it, or check the link below. The full link to the Q3 2021 financial results from Tesla will be there uninterrupted, so you can go check it out. Links obviously are below. And yeah, this is gonna be it for today's video. Thank you very much for watching. I appreciate you. If you like what I do here, again, consider subscribing to the channel. The name of the game here is to get the money up to $1 million, and I'll share my process with you guys. That is the name of the game. So thank you for watching. I appreciate you. Until next time, see you later. Love you all.